As we enter May, we're really shifting in terms of the US dollar outlook. What once was an environment where all the stars were aligned for the US dollar and almost every signal told us the US dollar was moving higher, those have started to shift, so it's a much more balanced outlook for the US dollar now. So the medium-term view is still that the US dollar climbs higher, but it's a more moderate pace, and it's when that we're in these environments where we end up in ranges for a while against a whole host of currencies. So some of the things that have shifted, the risk of deflation has come lower, the risk of recession globally has also come lower. In terms of what's taking place across the world, we're getting surprisingly lower data from the US and surprisingly higher data from Europe. And the story there is really that we're starting to see the influence of lower interest rates, lower oil prices, currency depreciation outside of the US. All of that's combining to create a very stimulative environment outside of the US. But also in the US, it's one where we're seeing the weight of the US dollar come through in things like earnings. So the story has shifted, but it actually hasn't really changed. When we take this into the Canadian dollar outlook, it's one where the drivers are really very much centered on oil, the Bank of Canada and the Fed, as well as what the broad US dollar is doing. And when we look at oil prices, sitting here in mid to late April, they look like they've bottomed, and the forecast is that they continue to slowly move higher until they reach a more equilibrium level, with Scotiabank looking for about a $58 average price in oil in 2015. For the Canadian dollar, that is one of the most important pieces, is the price of oil, partially because it's so important to the economic backdrop, but also because the central bank has tied itself to the price of oil in terms of where interest rates will go from here. So from the Bank of Canada's perspective, a surprise cut in January really weighed heavily on the currency, but now they've shifted to a far more optimistic tone, even citing the biggest risk now to the Canadian economic backdrop is in fact a better performing US economy than expected. That's a big change and one that supports the Canadian dollar. And finally, the broad US dollar outlook, one that's more balanced. And so I think generally what that means for the Canadian dollar is that we have widened intraday ranges, more volatility in the market generally, but all in all, it's one where the Canadian dollar should close 2015 at lower levels than it closed 2014, but one where we're unlikely to see brand new lows in the Canadian dollar unless oil prices move to new lows as well.